Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what happened today. Pretty wild start to the week today. Of course, obviously yesterday being the market was closed yesterday, so it is a shorter week today for President's Day for America. But nonetheless, let's go over it and let's figure out what has happened and what we can expect moving forward. So all that being said and done, if you enjoyed the video, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live for just $2.99 a month. The link is in the description of the video. You can join. We are pretty much at 300 members right now, which is great to see, where I post all intraday thoughts, post updates, technical analysis updates on Tesla, sometimes other stocks as well, flow updates on Tesla, which is a paid service. So you can pretty much get that as a bonus, which is nice. And yeah, if you're interested, link below. But let's just jump right into it. Tesla closing the day down, unfortunately, about 3% on the day, which compared to the market is a bit of an underperformance. The market only down about 0.75%. So a bit of an underperformance, but all in all, the EV sector in general was overall, fairly red, right? Not as bad as Tesla, but Tesla definitely underperformed a little bit more today for, honestly, sometimes for whatever reason it wants to, but it's not all bad news. It's actually, if anything, potentially even good news. Now let's talk about it. So there's a few things, right? There are still good news and bad news. Let's go over the good news first, actually, for a change, because it is a red day. So let's talk about something positive, right? So the positive news is as follows: two major things, I would say. The first major thing is the fact that we closed above 193. Now, my main important levels, and even when we were up here, I talked about how we could potentially just rally right up to this gap fill for the earnings gap, and then we can start consolidating kind of sideways between that earnings gap to like 195, give or take, of course. And kind of just go sideways and build up the momentum to potentially break out and go even higher, right? Or the other option is, well, first we do drop down and potentially retest this overall inverted head and shoulders that we had, which is the bullish, of course, head and shoulders that we did break out of just the other day on what it was Thursday, I believe this candle was, right? And then we had a pretty decent looking Friday, right? We talked about how Friday we did close below the open of we closed Friday below the close of Thursday. So that was kind of like a little bit not ideal, but not too bad. But the point I'm trying to make here is the fact that we did come down today to retest this overall inverted head and shoulders pattern somewhat successfully. I do want to say it's not like the most successful retest I've ever seen in my life, but it might be just good enough, right? And, for a couple of reasons. First and foremost, we went way below, right? We went all the way down to about 189 on the day, which is substantially lower than I would have liked to see, right? We talked about when we were up here how I personally expected like potentially 195 to as low as 193, right? And that's because those are the levels that are important for two reasons, right? 195 is also arguably a retest of this inverted head and shoulders, but it more importantly holds, excuse me, my nose is a little sniffly, but it holds this level back over here that we bounced off of before, which is again that 194 to 195-ish level. The 193 level is the one that's a little bit closer to actually truly retesting this inverted head and shoulders pattern, right? Which is, of course, going to be the level that we, of course, several times rejected at. That was essentially the neckline, if you will, of the inverted head and shoulders pattern, which we came back down into and then closed back above, which is so far so good, right? Again, it was a little bit sketchy, right? It wasn't the cleanest retest I've ever seen in my entire life, but hopefully good enough, right? Hopefully good enough with a nice, pretty long wick at the bottom showing that buyers definitely stepped in. But for the most part, Tesla did just follow the QQQ, which, did arguably close below this red line over here, this red trend line. So it's a little bit shaky here for the market, right? It's not the best looking close, but it did hold a 21 EMA, which is great, which unfortunately Tesla was unable to do. But we'll get into that on the bearish side of the video. To further continue on the bullish side of the video, on top of it, potentially so far looking like a solid retest, or somewhat solid retest of the inverted head and shoulders, we did come down to the exact bottom of this red channel, the rising channel that we are potentially in, right? This rising channel started from all the way back here, and you can see we're pretty much constantly touching all the candles and all the wicks all the way up here, clearly haven't broken above it, and the exact same thing down here. And I had this rising channel, I posted this to my members well before we even came down over to it. For instance, all the way down here, you can see, right? We're pretty darn close to this channel over here. I think I posted it even once before. I can't remember if I did. Now, this was when I posted it, right? Before we even came down to the rising channel, you can see, right? This wasn't adjusted, right? We came pretty much right down exactly to it, and so far bounced almost perfectly, like almost to perfection off of the bottom of it. So far, so good. And we had a pretty successful bounce from it and recovered above 193, which was one of the three main important levels that I wanted to close above. The other one, of course, being 195, which is a bit more, nicer to see, I guess you can say. And the one above that is, of course, the 21 EMA, which is around 197. So again, not the best close in the entire world, not the most convincing and most bullish thing in the entire world, but good enough at least. It's good enough for now, right? To still give hope and potentially a rally to the gap fill of about, again, 209, 210, which we'll talk about soon. So that's going to be the main two important things that I'm kind of looking at right now when it comes to the price action today and the close overall, that we held those important levels, bounced off where we needed to, and we're still holding in within this channel. So as long as we're still within this channel, in my opinion, the move back up to the earnings gap fill at around, again, you know, 209, give or take a couple dollars or so, is still very much alive and actually can even happen, you know, relatively quickly, potentially even this week or early next week. So that's the way I'm currently looking at it, right? Because technically while we're in this channel, Tesla's bullish. Though even though today seemed very, very bearish, and it was a bit of a close call. The final thing that's kind of, you know, potentially bullish here is the fact that if we bring out on the 4-hour chart, we bring out the Fibonacci, right? If we take from this potential swing low over here to this swing high over here, we did come down to, so overall we did hold the 0.5 level. We did close above the 0.5 level, which is nice to see. So if we do the exact same thing on the daily chart, it'll look a little cleaner, but we did come down to the 618 level, which is about that 190-ish level, and actually didn't close a candle below it, which is good because, again, usually when you have these retraces, in this case, from the swing low to the swing high, a bullish retrace, just like a cool off, if you will, as long as you hold one of these three levels, that's a good sign. If you bounce and hold off of the 0.382 level, which is in this case 195, which we didn't, but if you did, that's even more bullish. The 0.5 level, which is about 193, is decently bullish. That's like the most average one, if you will. And unfortunately, we did go a little bit lower on the 4-hour chart, which we did bounce, but that to me shows that, you know, we're still bullish, but it's just not as convincingly bullish as I would like to see personally, right? That's kind of the way I see it. So for instance, like if you go over here and you take this Fibonacci, right, do the exact same thing on the daily. It looks a little cleaner potentially here, but you can see how we pretty much bounced off exactly off the 618 level and did close above the 0.5 level more convincingly. And this is kind of what it looks like on the daily. Same idea, just, you know, slightly different candles, of course, right? So those are the bullish aspects of Tesla. RSI still looks great. MACD still looks bullish, right? So things are still looking pretty darn good overall. And I still think a move up to the gap fill at the earnings gap is still pretty likely, right? I definitely think it's still very much in the cards, but let's talk about the bearish side, because there's some bearish things to talk about here. The most obvious one by far is the fact that, well, we're below 195, which is not good, right? We closed above it and we held above it for a day, but like you, I'm sure you know, some of you, I have a 2 to 3 day rule where I want to see a consistent close in strength above certain important levels. In this case, 195, which is of course the level from back here. We failed to do that today, and we didn't close back above it, which isn't the most ideal thing in the world. So there's definitely some signs of caution here, right? So that plus, of course, closing below the 21 EMA, which is this yellow line right here, which is currently sitting at about 197. Losing both of those today, again, not the best thing in the world. It's not the worst thing in the world, but it's definitely not the best thing either, right? It shows that there's some signs of potential caution and maybe even hesitation. So it's not 100% bullish. It's just, in my opinion, overall, I still think the picture is more bullish and bearish, at least in this specific scenario, while we maintain this channel. It's just not as convincingly bullish as I would personally like to see, I guess is what I'm trying to say. So instead of being like, let's say 90% bullish, it's like maybe 70 or 65% bullish. That's kind of the way I look at it right now, at least until we recapture at the very least 195 and ideally the 21 EMA once again. Those are the main things I'll be looking at personally. And that's kind of the main thing I'm looking at. If we do drop out of this channel, let's say tomorrow, which will be pretty much below 191 roughly, that is where things can start turning bearish and potentially come back down to the low 180s, if not potentially even lower. So that's not something I would want to see. And the thing I want to talk about quickly here is potentially this, right? There is a potential that we make a small inverted head and shoulders, potentially even tomorrow, right? We come back down to about that 191 level, maybe to the bottom of the channel one more time, which in turn on the 15-minute chart will also make us potentially make this small inverted head and shoulders pattern. Again, this is just a potential. It doesn't mean this will happen or has to happen or whatever. Arguably, we did break out with this candle to finish off the day above where the arguable neckline of this potential inverted head and shoulders would have been. So in my opinion, this last 15-minute candle already kind of nullifies this potential inverted head and shoulders pattern, but not super convincingly. So the possibility is still there, just not as high as if we potentially closed below 193. That would have been much higher in my opinion as well. So that's the overall main picture that I see. Overall, options flow was all over the place today. We had some bearishness coming in down here. For instance, the 2 million put came in pretty much at the morning of the day, which clearly the person already made a lot of money above the ask, right? 205 put. And they clearly expected this move to the downside, and they clearly make us a good amount of money on that. But throughout the day, it was pretty mixed for the most part, some bullishness, some bearishness. But towards the end of the day, a lot of bullishness came in, a lot of bulls really stepped in, and they really wanted to drive Tesla back up. And it looks like they want to continue driving Tesla with a lot of weekly ones coming in as well. Pretty decent premiums, for instance, 330,000, 195 call for this Friday, right? Another one over here, 120,000 above the ask shows urgency also for this Friday, 195 call. All of them not too far out of the money, but out of the money nonetheless. So people are expecting continuation upwards, but the most important part and most important thing to pay attention to coming in, especially tomorrow, is I believe we get the FOMC minutes tomorrow, and of course we have the NVIDIA earnings, which is arguably even more important than the FOMC minutes coming out tomorrow, which can definitely drive the overall tech market for better or for worse. So we'll see how that plays out. But that, for the most part, is what I am personally looking at right now, and what I will be constantly updating my members about as well throughout the day tomorrow and really the rest of the week. So all in all, thank you so much for watching. If you enjoyed, don't forget to hit that like button, and I'll see you tomorrow. Peace.